my name is Todd Jackson. I'm from the Montana Board of Housing in Helena, and I do work with the reverse mortgage program there, which we call RAM, which is the reverse annuity mortgage. So when people say, oh, it's a RAM loan, that's all it is. It's just a reverse mortgage loan. So, you know, as you can see on this pamphlet, just right up here it says RAM. So some people might just say that's a lingo term, but it's just a reverse mortgage. Does everybody know what a reverse mortgage is? Sort of, yeah. I mean, they've been around for a while. I think since the early 80s. I believe it was the Reagan administration that started the ability for seniors to use the equity in their home to basically get a loan. And our program has been around since 1989. It's pretty unique, and I was telling Cookie about it earlier that there's only a few states in the United States that actually is the lender for the program. Maybe there's 2 other states in the country that does that, so it makes Montana fairly unique in that way. But our program is where the state is the actual lender, and so that's what makes it very different, I guess, than most other reverse mortgage programs around the country. And of course, you see the Fred Thompson and the Fonz, Henry Winkler on TV doing their commercials and stuff like that. And some people, have heard good things about reverse mortgages. Some people have heard bad things about them too. And there are good and there are some bad things about them as well. It just depends on who the lender is and what the situation for the borrower is. So my objective in my role is to make sure that a reverse mortgage is me and the counselors is to make sure that a reverse mortgage is going to be right for a person in their particular time in their life. I find myself a lot of times even talking people out of them because I work in, it's kind of a rotating fund, so I don't get any bonuses for adding people to the loans. So a lot of times I'm just making sure it's right for the person, So, I'll just go through the presentation. A lot of the stuff in the presentation is in the pamphlet. The pamphlet just has a lot more detailed information. But here we go. All right, so the purpose of the Montana Board of Housing, RAM, provides financial flexibility to Montana low and moderate income seniors by allowing them to use the equity in their homes as a source of income. Seniors are empowered to live in their homes as long as they want to. What is Montana Board of Housing Reverse Annuity Mortgage Loan? It's a loan available to seniors 68 or older. There are a lot of programs out there, and most of them are for 62 and older. Ours is 68.
What's the reason behind that?
Well, we'll get to that. Actually, I can kind of tell you now. If you get a reverse mortgage loan too early in life, most of these payout periods are 10 years. So let's say you're struggling a little bit to make ends meet, and you're 62 years old, and you get one of those loans. You get your 10-year payout period, and then you're 72, and you're kind of stuck where you were. You're not getting any payments anymore, and you're kind of stuck where you were, but now you're just older. And so, and we'll get to this a little bit later, but that's a big thing is how old you are, what your health is, kind of where you're at with your health and things like that. One of the problems with outliving your loan is that you're stuck on the same spot when you're older. So that's something to always keep thinking about. It enables eligible homeowners to access up to 80% of their home's equity. So in our program, let's say the house is $100,000, we can give them an $80,000 loan, right? But if the house is $1 million, we can only give them a $150,000 loan. We have a maximum on ours. And that's just because, well, we can't give them $500,000 because we don't have that kind of money in the pot. We want to distribute, smaller loans for people who need it. The homeowners can draw the mortgage principal in a partial lump sum and also receive monthly payments over a 10-year payout period. The lump sum is a amount of money that you get at the closing of the loan, and our maximum lump sum is $10,000. But there are exceptions to that, and we'll get into that later. The homeowner's obligation to repay the loan is deferred until owner or survivor of the two passes away or permanently vacates the home. The home is usually sold to repay the loan. It is a condition of the loan that the property continues to be in good repair and they pay property taxes and keep up on their insurance. All right, so this is just kind of how they got the reverse mortgage loan. You know, you see kind of that happening. And in a conventional loan, as you see, you're just basically, as you receive payments, your principal and interest goes up. So you're actually gaining money instead of losing money. And that's where they got the whole reverse mortgage principle, because it kind of goes opposite directions. And that's kind of a way to visualize why they call it a reverse mortgage. You know, instead of you're paying on a mortgage, you're actually receiving money. And what's great about these programs is this is money that, well, most of us put most of our money into our homes or our home payments and stuff like that. And it is definitely a way for folks to use the money that they put into their house to get it back, you know, to use that equity. And it's actually, you know, very useful for some people. What is not an MBOH? It is not considered income. And see, this is how I tell people, it's not income. This is basically your money being given back to you. It's kind of like an asset being given back to you with an interest rate. See what I'm saying? See, it's not considered income by the IRS. It does not affect Social Security or Medicare payments. They do not have to be identified if one spouse is placed in a nursing home or extended care facility. So that's a really good thing. The pros and cons, okay. So it allows low-income seniors to, you know, use equity in their home. It allows them to remain in their home to meet their monetary needs. It allows them to retain ownership of their home. But some seniors may outlive the life of the loan, exhausting the equity of their home, leaving less or no options. So that's the real key, you know. That's why it's kind of a timing issue. And I tell my counselors a lot when they're talking to people that want to get into something like this. You know, think about where you are with your age and your health, and if it's something that you really, really need. You know, I get calls from someone who's 68, he's in great health, and he's doing okay, but it'd be nice to have that extra income. I usually try to talk to him and just be like, can you hold off for a while before you get one of these maybe? Maybe wait until you're a little bit older. You know, if you can, then do it. The homeowner retains ownership and full control of the home. They are responsible for paying insurance and property taxes. A RAM loan is never due and payable until the homeowner no longer lives at the home. In our case, the person must be living in the home for 6 months plus a day, so more than a half a year. So, because we have people that snowbird and things like that, and so if they go to some place during the winter for 4 or 5 months, that's okay. But if they leave for 7 months, it would be considered default of the loan. The payments are based on a 10-year amortization schedule. The stated loan amount, let's say, is $100,000. Is the total principal of the interest at the end of the 10-year period. Interest only accrues as principal is paid out. The interest rate is a fixed 5% of the loan. So it's fixed. It's a fixed rate. You know, they have fixed rates and variable interest rates, right? And some of those private lenders might do variable interest rates, okay? And sometimes those can help someone, or sometimes it can really mess things up later, where they may there may not be anything left after they sell the home, pay off the loan. There might not be anything left over, you know. So, you know, there has been stories of predatory lending, of course, Just like anything with seniors, you know, there's always a scam, right? And it's no different in the reverse mortgage world. I think when they first started, there was, you know, scam artists that went out there. They have the people sign their papers, and then before you know it, the people are being kicked out of their homes after the 10-year payout period or something like that. So, you know, there has been stories like that. Yeah.
I'm a little thick. That interest rate, is that something, say, I got the loan and I was doing monthly payments, so that 5% come out of the monthly payments, or how does that work?
It's 5% compounded, okay? And so what that means is it's hard for me to not explain this with an amortization schedule, but that rate will never change, okay? But that's the rate that you'll pay as the principal increases that is being lent to you. It'll be 5% of that will be the interest.
So keep it simple, on a $100,000 loan, $5,000 would be your interest bill, just very simply. That's what your interest is. That's simply, but it's compounding.
At the end, yeah.
So it is growing.
That's right.
But just to keep it simple in your head, you owe $5,000 plus the $100,000 principal that you borrowed on that $10,000 a year stream.
And that's due at the end of 10 years?
Not due, it's due when you sell the house, when you leave the
That's
house.
right. Exactly.
Or you don't live in it anymore.
Okay.
Yeah. There's a, you know, and the principal accrue, or the interest accrues, you know, quickly because of the principal. But then when people get to the end of their payout periods, the interest still accrues, but not the principal. Okay, so even if you outlive the loan for another, and you're not getting your payments, but you're still in your house, which you can live in your house for forever, even after the loan is over. The interest still accrues, but it's very minimal amount compared to how it accrued when you were getting payments. See?
Okay. And then if a person is not able to sell the home at the end of 10 years, then do you take over and sell the home?
Yeah, you know, we haven't ran into it that often, but there has been foreclosures before.
Does it work like a foreclosure?
It can. Most of the time, we recommend that the borrower has kind of their ducks in a row with their PR and the POA and all that stuff, the personal representative of the estate. So for instance, if a borrower passes away and then there's the house, then the person who's in charge of the estate will be in charge of selling that home and then paying off the loan, of course, and then whatever's left over goes to the estate.
Again, I think, you know, just to make clear, you're not required to sell or move out of the home once your income stream ends at 10 years.
That's
You
right.
continue living in it, as long as you enjoy that.
Right.
And then, but the interest compounds, so at the end of 1 year, you got $10,000, at the end of 1 year, you owe $500 in interest. Second year, you owe $10,000 plus the $500, which is compounded, so it's compounded at $10,500,
Right.
plus whatever you're drawing down. So interest does grow.
It does grow, yeah, and it, you know, oh shoot, I wish I had an
I didn't bring my,
but that's okay. I mean, if I had an amortization table, it'd be easier to explain, but
The chart shows a visual, kind of a visual version of that, right? Where you can just see the more years you've had it, you know, and at first you're really just getting your principal and then maybe a little interest. And because it's compounding, that's why it's shaped kind of like a
Wedges out,
triangle
yeah.
rather than just a straight line.
So are you going to be paying interest, even though the loan's paid off, or you're going to continue to pay interest until you die?
No. Okay, so basically, when you pay off the loan, when the house is sold, that pays off the interest at the same time, okay? So at the beginning of the loan, they'll give you an amortization table. So let's say you take out a $150,000 loan with us. You're really only getting about $90,000. You see what I'm saying? Because the rest of it's going to be interest in the next 10 years, right? So they'll show that to you at the beginning. So no matter what, though, it's just $150,000 at the end. So there's nothing else you have to worry about. There's no surprises. They give you an amortization table, and then even after the 10-year payout period, they can give you another one that goes on for as long as you want. They can show it how much you will owe, what year, what month, for the next 20, 30 years if you want.
Okay, so once the loan, let's say that I take the money out, borrow, whatever you call it, and then I outlive it because I'm telling you,
Yep.
how much interest am I gonna?
So basically, the interest still accrues, but not as much because the principal is not being paid out anymore, okay? So it won't accrue as much, but it'll still accrue every month, okay?
Which my descendants would have to do. I mean, that would affect whoever's gonna get the estate.
Yeah, but basically, when the loan gets paid off, it all gets paid off. So then that's it. So, let's say you did a $150,000 loan, and at the end of the schedule, it's $150,000. That includes all the interest, okay? But you outlive the loan and you keep living. Well, the interest still accrues on it, but at a smaller rate, okay? And then finally, 5 or 6 years later, it's time to sell the home. Well, maybe it'll be like 162, you know, or something, or it'll be like 160,000 because you went another 5 years and that interest accrued. But that's why we only do 80% up to the home value. See, there's that cushion, I guess. It's a cushion for you guys and a cushion for us too. For instance, you know, because then if the home loses value for some reason, and it has in some areas of Montana, not all, but some, you know, where it's gone down, that's where that 80% up to home value is a good cushion. So, you know, but let's say you owe us $150, and the house is only really worth $100,000. Well, you sell the house, we get $100,000, we eat the rest. That's part of the deal. Now, other places don't do it like that. You might owe them money, okay? We haven't ran into this before because most of the home values have gone up because, and even if they did go down, like I said, we have that safety net with the 80% up to home value. So that's why we do that.
So just to go, you just said that, so would the estate be 1099 on the $50,000 you forgave?
1099.
Yeah, well,
Yeah.
you said if they owed you 150 and they were only able to sell for 100, would the estate be 1099
No.
income for the $50,000 write-off?
No. No.
I know you're not an accountant, so I don't know.
No. $150,000. Basically, whatever you sell it for, we get. But in almost most cases, almost all cases, it's the loan gets paid off, and usually there's something left over. In almost all cases, depends on really how
But
much is dropped.
I think the IRS is gonna call that
That's
a
Debt forgiveness,
debt forgiveness, and
Yeah.
they tax you on that.
the estate, or if you're still alive.
Yeah.
It's a potential, just saying, it's potential.
Well,
I mean, you've never seen it happen, but
No.
I'll bet you if we had an accountant sitting here, they'd say that estate is gonna get taxed on that 50 grand.
Unless the person's insolvent.
well,
Well, yeah, or has no,
Well, their only source of income, Social Security, I mean, it's.
Yeah.
are you saying
and probably,
if there's something left over?
No, what we're saying is that $50,000 is forgiven, you owed 150, but you only sell it for 100.
Right.
The IRS will want that 50,000 to be reported as debt forgiveness.
No.
And that's why you're
yeah,
1099 when it
but
goes to the estate.
probably most people that are doing a reverse mortgage aren't gonna have anything anyway, so it's probably a moot point, but
Yeah.
You know,
I haven't seen it.
what happens if, well, you haven't seen any that have sold for less than
No.
so that, but
Not for the loan
that's,
amount, no.
yeah, that's a possibility. What happens if I get $150,000 out of my house on a reverse mortgage, and then when I go to sell it, it's worth $500,000?
Okay.
Do I keep,
Yeah.
or you,
No, it's like.
Because no
although
deed
you
has
pay the 100
transferred.
You pay the 150 off, whatever's left is the estate's.
okay,
Yeah.
because no deed is ever transferred.
No.
Oh, I was under the assumption with a reverse mortgage, basically, you
No.
or whoever the bank was owns the
Oh,
house.
you own it, we have a lien on it.
Okay,
That's
okay.
it. First.
Well, then it's not as bad as I thought it
No.
was.
Now, and like I said, there has been some
Scams.
scams and stuff where they're like, here, sign this and we'll give you $150,000. And people are just like, great. And then next thing you know, something like that happens where because of their interest rates and closing costs and all this other stuff that they threw in there, You know, yeah, they get 150,000, but for some reason they owe 300,000 or something like that. I've heard stories, you know. I don't believe those things exist too much anymore, but you never know. I've received some phone calls from some companies that were kind of scammy companies. They're just kind of feeling me out to see what we do in Montana, you know. But I could tell because they were asking some weird questions. But you know, if I always tell people, and I'm not to try to be like, ooh, you know, we're all good in Montana, but if you get a phone call from out of state, it might be one of those.
So I think I've heard of people that have actually signed their deed
Yeah.
and given the house to whoever.
Yeah.
And that's, but these old people,
I know.
God.
I've had phone calls where I'm just like, you didn't sign anything yet, right? And they're like, no. And I'm like,
well,
oh,
except for the one that we had to have notarized.
oh, yeah.
Yeah, and you know, I would say absolutely, that would be a good time to call Missoula Aging Services or directly to contact Adult Protective Services, because that definitely sounds like a scam.
Oh,
or,
yeah.
Some elder financial exploitation.
And as you guys know, if it sounds too good to be true, it is. And that's the same in the reverse mortgage loan.
I was a little late, you may have already addressed this, but is 10 years the only term?
For our program, it is. It's a 10-year
And it
monthly
is-
payment.
And can it be renewed if there's enough value after the original 10?
They basically have to pay off the loan, the current loan, to get another one.
Right.
And I've seen
But,
that happen.
you know, but in the example of, say, a Missoula house that's worth $200,000, well, in 10 years it could be worth $350,000, you know, we don't. So in that extra value, then you.
No, because they would still have to actually pay off the loan, the current loan to get another
So
one.
pay it off and then you still
Yep.
have
But
a
he-
property that's worth $150,000.
Exactly. You could do it, yeah. I've seen it do it on the same house.
Yeah.
Yep.
They will not advance you that 150 to pay off the
Right.
loan to get a new loan. You have to get,
You could
cash.
refinance or,
Yeah.
yeah.
So you'd have to, so it's a
And
moot
then that-
point, you could have to sell your house to get another.
yeah.
Exactly. But I've seen somebody where they had a reverse mortgage loan because they were in some dire straits at one time, and then they actually ran into some money from something else, and then they paid off the loan, but then the husband died or something, and something, then the money went away, and she got another loan on the house later on. It was kind of an interesting deal.
How long has the program been in operation?
Since 1989. Yep.
Is the interest rate always 5%? Do you annually revisit it?
No, it stays fixed no matter what.
Well, I mean, I understand it's fixed, but has it ever been a different interest rate? Or do you revisit, like, if they want to apply 2 years from now, is it still going to be 5%?
Yes.
So it never will change?
It'll never change.
And you do, is it all lump sum or do you do?
No, you can do up to a $10,000 lump sum, and then the rest of it is a monthly payout. And we'll get to lump sum exceptions a little bit later here. So, all right, let me get up to here. All right. Minimum requirements, 68 or older. Income limits, so in our pamphlets, we have those income limits for 1, 2, 3 person household. The property must be located in Montana. Yes, people have called from other states and being like, well, I'm right outside of Montana, and you guys have a great program. I'm like, can't do it. MBOH must be the first lien holder position, see? And so we're not owning the home, we're just a lien on the property, just like any other mortgage would be, right? None or minimal mortgage remaining. So let's say you owe $15,000, we only do a $10,000 lump sum. We can do a lump sum exception, and we'll go over that, but you actually have to go, we have to write a letter and bring it to the Montana Board of Housing, which is an actual board of people, and then we say, they only have, $15,000 left on the mortgage, can we do this? And they're just like, sure. So, must complete counseling with a RAM counselor, that's people like Jordan. And our minimum loan is $15,000 and our maximum loan is $150,000. So we're able to do these kind of things with low closing costs because we have such a simplified loan, but on top of it, we have caps on how high we can go.
Todd, I think you should point to them on page 6. This is a really good handout, and it wasn't clear to me. You talked about it a couple times, is that you may get a $150,000 loan, but you're not getting $150,000 over 10 years.
Right,
You're only getting $115,000 of that $150,000.
that's right.
The remaining $35,000 is interest that's accruing over those first 10 years.
That's right. And what's beautiful about during the closing period is that they give you the whole amortization schedule, and that shows your whole loan for the next 10 years in 3 pieces of paper, so you can see exactly how much would be owed at this point in time, or next month, or whatever. Yeah.
Let's say somebody got one of these, they're 2 years into the deal,
Yeah,
and they win the lottery.
yes, they can pay it off early.
Prepayment is
Yep.
okay, and the interest, yeah, okay.
Yep, yeah, they can pay it off early, it happens, I just.
It's
had
not
lady-
like a car loan where, yep, you gotta pay the whole interest amount.
No,
Okay,
yeah, in fact, there was one fella a while back that he got his RAM loan and then he passed away a month later,
oh, nice.
you know? And so, but it was one of those things where hardly anything was owed back, you know? It was like $500 or something like that. Because it's still his money and, you know, it's only whatever he got. So, you know, the estate took care of it and that was it, you know? It was one of those things. I had one lady who passed away 5 days after she received her last payment. And I'm like, you know, so I was talking to her daughter and this was a while later and I'm just like, well, if anybody was gonna do a reverse mortgage right, she did it perfectly, in a sense. You know, and I wasn't trying to be morbid or anything.
And it wasn't suicide.
Nope. It was just, you know, I mean, but that's the timing issue that I talk to counselors about. Nobody knows when they're gonna pass away, really. Nobody knows when they're gonna have to go into extended care living. But some people might have an idea, you know, if you're young and healthy and you got some money and you're 68, don't do it. If you're 79 or 80 and it's just little bits of Social Security coming in, you can't buy groceries, then it's time to maybe do it, you know.
Are these income limits net or gross?
They're gross, but we'll go over some of this stuff too. Okay, are there any exceptions to age exceptions? None. Loan amount exceptions? None. Income eligibility, but are there lump sum exceptions? Now this is what we've been talking about. Possible, depends on each personal situation. MBOH has shown flexibility in the past. I've never seen them not do it, so if it's a good enough reason to do the lump sum exception, they will. It can't be for a brand new Corvette. But if it's for a leaking roof or some sort of necessity, or even bad credit card debt, they will do it, or an existing mortgage. That's not, you know, a large amount, but I've seen them do a $70,000 lump sum exception to pay off an existing mortgage, you know. It just depends on where the people are at, depends on how the board feels that day, but usually I've never seen them say no to anything, so. They need a letter with the application requesting the exception and why. Can't be for a Corvette and new cabinets in the house, you know. Can't be for anything aesthetic, it's gotta be something for more of a necessity.
Can it be for repairs if the appraisal calls for repairs?
Well, but no, because we can't front them any money to get we can't front them any money to pass the FHA appraisal. That's the problem. We can't do the loan first because the FHA has to pass first before we can do the loan. But if something happens, you know, if it's something else that where they can still pass the FHA, but it's something that they need to be done, you know, a lot of times it's credit card bills, or a lot of times it's mortgages, or medical, backed up medical bills, or something like that. It's usually something that's, you know, financial.
Somebody needs a new roof.
It won't pass FHA, that's right.
What if they put a new roof on their credit card and then they
People have done that. Yeah, people have done that. People have done that to pass the FHA inspection, and then they pay off that with a lump sum, the credit card bill.
Well, and here in Missoula, and I'm sure Brendan knows more about it than I do, there's the Human Resource Council has a home rehab loan that would be a smaller, what is that, up to $5,000 maybe?
25, oh, it's 25, 30,000.
Oh, okay, yeah, so that could be maybe an option, and then that
but they place a lien on the property, so it's a
Right.
mortgage, but then if it's, can be paid off in a lump sum, because it's a small existing mortgage,
Right.
then maybe it's possible.
Yeah, there are some little ways to do it, and unfortunately, a lot of people who probably need a reverse mortgage more than anybody are people that live in houses that can't pass an FHA appraisal. That's, it's tough.
Do you do a debt ratio I mean, do you look at their debt ratio when you're giving them these loans?
No,
Wow.
because the loan that we're giving them it's what they put
Is
in
there,
their house.
right.
So we know that like, let's say they own the house, well, that's what we're dealing with, that's what we're playing with.
What if they don't make payments?
Well, they don't make any payments, they only receive payments. in a
Oh, that's
reverse
true.
mortgage.
That's
So,
true. I'm looking at it
But
ass backwards.
you bring up something though that could be a problem. What if they can't afford their insurance or property taxes, right? And that does happen. If they can't, we usually, I have to remind them, hey, I haven't seen your deck page for a while for your insurance. I could look online and see if you're behind on your property taxes. And if it gets to a point where they're way behind and they can't do it, we'll pay their property taxes, and then we wrap that up into the principal of the loan. So they'll just end up adding more to the principal of the loan. But we don't want to see anybody default on the loan, because they're still receiving payments, and, we've never defaulted anybody on the loan, I don't think at all. So,
Could you escrow from the payment?
no, we don't do that.
Why not?
I think
people would.
I asked about that, and I think it has something to do with how they created this in the legislature and legal stuff.
One thing that comes up too, I mean, especially if someone's anyone who's considering a RAM loan and might qualify for it should come and speak to the Resource Center of Missoula Aging Services too, because if you are qualifying for a RAM loan, you probably should not be in a situation where you're really burdened by your property taxes, because you probably qualified for some property tax relief. And so that's definitely a situation where, I mean, we do those all the time. We can get people in 30 minutes, we can get that property tax relief. So get them signed up anyway. So and there are a lot of programs out there that help folks that actually have fewer strings attached than a reverse mortgage. So it's not something you'd want to consider in isolation. You'd want to look at other programs that are available.
Definitely. And, like Jordan said, it's good to look around at all options, and definitely go through counseling with our reverse mortgage counselors, because they're going to help determine if it's, or at least help you get educated so you think it's right for you. Go ahead.
You just mentioned other options.
Yeah.
What would those other options be?
Well, the other options would be going to a private lender, I guess, for a reverse mortgage, or if you live in outside of town, there's some RD loans and things like that through rural development. Of course, there's HECM loans, which is a different kind of reverse mortgage, which gives you a little bit more flexibility, but they have higher closing costs and stuff like that. And that's usually what they run through at Man Mortgage or Guild Mortgage and some of those private lending companies.
Are those good companies to, 'cause
The ones I think we have in Montana are just fine. I don't think we have any predatory lenders. I've talked to most of the people who do it in the state. I mean, they want to make, they make their money off interest rates and stuff like that, right? They got to make money why would you do a loan if you didn't? So it's a bank,
Mm-hmm.
and they want to make sure that it's profitable for them. So they're going to tell you that you can have the loan, right? I'm going to try to talk you out of it. They may not, and I'm not saying that they won't, but I don't make any bonus points or any extra dollars if you don't pick up the loan or not. I'm just trying to make sure it's right for the person, so they're not really suffering when they're older,
Mm-hmm.
So Ours is more of a nonprofit kind of thing, in a sense. You know, but they are good people, and I think, honestly, that they probably mean well when they're doing private loans.
You mentioned Guild, what was the other one?
Man Mortgage, I believe, in the Great Falls, or maybe it's Guild in Great Falls.
Guild and Man both.
They both
They're
have
both
offices.
here,
They're both
yeah.
here. Yeah.
There was other banks, you know, that did it, but I don't think they do it anymore, because it wasn't profitable enough for them, see. I think one reason was they ended up with foreclosures, or they ended up having to do the home sales themselves, or people defaulted on the loans, and just, you know, it just wasn't profitable enough maybe to how much work they have to put into it to make it happen, so.
I hate to interrupt again, but one of the options, do you discuss selling the home as well? Just because, again, upkeep, continuing increasing property taxes, home insurance, not being able to afford it.
I
You
do.
can sell the house,
Yes,
get the equity out of it, create a stream of income, rent, and not have those responsibilities.
I am, you know, a lot of times I have to be the guy that has to have the conversation with grandma and grandpa that their kids don't want to have, you know? I have this conversation almost weekly with people because the kids don't want to bring it up to grandpa because they know that they're going to be like, well, they don't want to bring it up, you know? And a lot of people are just afraid to make that, you know, that first, like, you know, what do you think about moving somewhere, you know? Are you thinking about moving out? A lot of those kids just don't want to do it. So I just say, have you ever thought about moving out? Have you ever thought about selling the house and getting that nest egg? And then I work in tax credit properties, so I know a lot about senior tax credit properties. You know, Jordan works in it, and he used to work in it back in the day at Missoula Housing. So I have that resource, so I can, you know, talk to them about some other places to go, but it's not their house. You know?
Well, not only that, but rent's so high.
Mm-hmm.
don't
So
know.
I try to
Rent.
talk to places about, you know, where they're income sensitive, like low income senior housing, but it's not. There's some really nice ones, you know, that are fair about how much rent they charge compared to how much income they have.
So, and Brendan, you know, I mean, if someone came in and for the counseling and we were getting that vibe that that's something they should really consider, maybe facing foreclosure or something like that, we'd probably refer them to you too, so you'll probably see him.
Yeah.
Brendan's a housing counselor at Homeward, so.
Yeah, I mean, I have to talk to people about everything, you know, and then I have to talk to the kids about everything, and then all of a sudden I'm the middleman in between. I'm like, you know what, y'all need to get together and talk about this stuff, because I'm not your attorney, you know?
Let's keep it rolling.
Okay. Yeah, so over income, are there exceptions? No. But we have a medical worksheet, okay, that may help applicants become eligible. Application form is on our website. There's a timetable. It usually takes, I would say, about 2 months to go through the whole application process, the appraisal, the title, and then the closing. 2 months, 3 months. You know, it just depends on how busy your title companies and your appraisers are in your particular area.